Hey, good afternoon, everybody, and welcome to the closing bell for March 10th, 2017 here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Here to wrap up all of the action from today, this Friday, the final trading day of the week, and for all of this week. It's been an impressive week, and as a matter of fact, let's just jump in and take a look at the Dow Jones. You see that the Dow Jones finished today up 44 points at 20,903. You can see that on the weekly chart. It actually finished down for the week, though. Right here, it indicates that we opened up a little bit higher. As a matter of fact, we opened up at 20,941, and we ended up finishing the week at 20,904. So we actually finished the week in the red as far as where we opened. Now, why is that a big deal? Well, it really isn't, except for the fact that we've had some impressive data this week. We've had ADP data that's just been phenomenal on the employment side. We had the non-farm payroll come in at 235,000. You had average wages up, but only 0.2%. And I'm going to touch on that in a second because I think that is something that we can't just shake off. The fact that we had huge job growth, that we have unemployment at 4.7%, so people are talking full employment kind of things, to me, then that should mean that demand for good quality workers should be at its pinnacle right now. That means that if someone wants to keep a worker, folks, they're going to have to pay them more. Well, I'm not seeing that on the wages side. Yes, it was positive or in line with expectation, but at 2.8% for the year, that's not telling me that wages are growing as fast as what people are anticipating or what economists are anticipating as far as the rise in inflation. Doesn't mean that things aren't all that good, but there's that disconnect. The next disconnect that I see is the action that I saw in the commodity markets and specifically crude. You saw crude over the week basically just crater. For the week finished right off of its lows at 48.49. Its lows for the week were right, the low of the week was 48.31, so we almost finished on the lows. There was an attempt today to challenge $50. It just wasn't being met. And to be quite honest with you, if we're seeing this kind of demand coming out of the economy, coming out of the employment sector, we should see some demand in the crude markets, and we're not seeing that right now. Yes, there's a glut. There's all these new findings. We saw today there was some discussion about some new shale findings here in the United States. Could be one of the largest in history. The point being is that the crude markets are not indicating a huge demand. Again, could put that out there on the supply side, but we're also not seeing it in the Middle East or in Europe with the Brent product, which is more prominent over there. It finished the week also off of its worst levels at 52.19. Again, seeing some challenges there. Taking a look at the S&P 500, finished today up 7 points, and for the week, it did finish lower. Now, yes, right off of where it opened, but it finished in the red. The large caps have been holding up quite well. There's been a lot of positive economic data. The earnings reports have been solid. You continue to see that in general, it should be an upbeat market. But right now, there's a little bit of uncertainty. Now, yes, it's well above those critical levels that we want to see challenged if the bulls are going to be put on notice, specifically the 20 and 50 day. So there's a lot of work to be done if, in fact, there's going to be some negative nature into the market. But it's just not there right now for the large caps, especially tech. Tech actually finished up this week with NASDAQ finishing up at 5,385.90, up 21. It finished up on its best levels of the week. Tech has been the leader of the markets. It has been holding up the markets very well, especially chips and semiconductors have been incredibly powerful. You're also seeing in the tech sector large caps, Apple, Amazon, some consumer names holding up there because really the consumer is the backbone of any further catalyst to the upside. And speaking of the consumer, let's take a look at the Russell 2000. Trading at 1365.26, it is trading off of its worst levels of the week. It actually traded as low as 1356, but this is the canary in the coal mine. You've heard me say this all week. I said it on television today, and I've been saying it for basically the last couple weeks. The fact of the matter is that if this domestically centric index is continually lagging, that is a red flag. That means that things like tax reform, both on the corporate side as well as on the personal side, that means that wage inflation, if we don't start seeing that pick up, that means that if we're not going to see a repeal and replace that's going to make sense for Obamacare, so on and so forth. All of these campaign promises. Let's talk about regulation on the investment side. If these things don't start to become a reality, if there is not meaningful movement forward, that's going to be a potential red flag. And we saw that represented not only on a weekly basis in the Russell 2000, but if you actually take a look at the daily chart, you can see that it broke through the 20 and 50-day moving average and today was not able to get above that 50-day moving average. That means next week the bulls have some work to do. Otherwise, we're going to start to see that this 1360, 1340, and 1320 levels, there's going to be some battlegrounds being fought there. Finally, taking a look at the dollar index, and we also want to take a look at VIX. Taking a look at the dollar, you can see that the dollar has underperformed all week and now is getting in to that area where the bulls are going to be put on notice. Now, it did bounce off of its worst levels today, but if we look at it on a weekly basis, a little bit larger time frame, we can see that the dollar did finish off of its worst levels of the week, but still well off of the highs that we saw earlier midweek when it was trading at 102. This has put a lot of universal pressure on foreign currencies. That has Europe with the euro, British pound sterling. It has the yen and yuan all under pressure. We're going to see if that dollar strength continues, because one of the things that we've noticed is that we've had market strength and dollar strength moving synonymously, and they're going to have to, that relationship's going to have to be able to stand up if we're going to see this momentum to the upside continue, because we're going to need other types of participants in this market. And right now, that's under pressure on a weekly basis, still above its 20 and 50-day moving average. But in the shorter term daily basis charts, you're seeing that there is a challenge on the dollar. Let's see how it opens up next week and starts to test that 101 to 100 level as it did in the earlier this week, but has bounced off quite nicely. That close below the 20-day moving average gets the short-term dollar bulls on notice. We did see that bonds did pick up. You can see that the 10-year finished up about 8 3/4. You see that prices are up, yields are starting to come off a little bit, both on the 10-year and the 30-year. You see that they've both finished off of their best levels, worst levels of the week. This is something that was anticipated maybe earlier this week, a little bit of a bounce in the bonds in front of what is going to be a highly anticipated FOMC meeting next week. 93% probability that they're going to be raising target rates at least at 75 basis points or higher. Right now, that's the target, about a quarter point, and that's a 93% probability being priced in, and that was using the Fed funds tool from the CME. Finally, volatility. Now, the one thing that's notable about volatility is that it pulled off of its best levels from the week in the mid-12s, or right here in the upper 12s or mid-12s. But it did finish the day above 11, right around 1170. That's important. It finished off of the lows of the week. It really started to continue to move up. A challenge in here is what the market's waiting for. It did break its 20 and 50-day moving average. We're going to see if this continues. If vol stays cheap, maybe that's complacency. We're going to see. But I'm surprised that vol didn't pop this week. Even though we had great data, we're not seeing like the small caps. We're not seeing the bonds pull off as we would expect with what has been pretty impressive numbers. All right, folks, that is it for the closing bell. I want to thank everybody for participating this week. And as a matter of fact, take an opportunity this weekend to check out the Premium Pass. You can go into premium content. You can sign up and you're going to get access to all of the videos that we have. We have a risk assessment tool so you can get your risk number. We have a probability calculator. There's a real-time chart and some seasonal charts that you can take a look at. These are the things that I've been using as I show all of you this information, and you can get that right here. And there's a pass that you can do for a couple days to check out all of these different products on MarketStream.live. All right, that's it right now for the closing bell. You all have a wonderful weekend. I will be back next week, and we are going to be talking markets here at MarketStream.live. Have a great weekend.